Wall Street may be underestimating what's coming next. While most investors are watching tech stocks and earnings reports, something far more explosive could be brewing beneath the surface. AMC stock is quietly building the exact kind of pressure that once triggered one of the most dramatic short squeezes in market history. With short interest growing and the clock ticking on rising pressure from short sellers, we may be standing right in front of the next big move. This isn't just hype. The setup is real. And today, we're diving into why AMC could be about to defy expectations all over again. If you don't want to miss big moves like this, hit subscribe to stay ahead and help the channel grow. Let's start with the core of this potential squeeze. As of April 30th, 2025, AMC's short interest hit 62.49 million shares. That's 14.51% of its public float, and it's not slowing down. Compared to last month, that's a 6.86% increase, which tells us more traders are betting against AMC right now. But here's the twist. The short interest ratio, also called days to cover, stands at 7.2. That means it would take more than a full trading week for all short positions to be covered based on average daily volume. And that kind of pressure can erupt fast if buyers begin to pile in. Let's talk about cost to borrow, because it's often overlooked. Recently, AMC's borrow rates have been fluctuating between 0.74% and 1.71%. While that's not sky high yet, it's still enough to signal that short sellers are paying attention. If those rates start creeping up and combined with a sharp increase in share price, you suddenly have a financial incentive for short sellers to begin covering fast. That's when we start to see those parabolic moves retail investors dream of. Let's not forget the lessons of 2021. AMC went from just over $2 to more than $70 in a few short months. That wasn't just speculation. It was a coordinated response to high short interest, retail excitement, and a vulnerable position on the short side. The communities that drove that momentum haven't disappeared. If anything, they've evolved, become more organized, and gained experience in spotting repeat setups. And the current numbers? They are not identical, but they rhyme. The short interest is climbing, the borrow rates are active, the chatter online is gaining volume. The ingredients are there. All it takes is a spark. Just a quick shout out to our sponsor, Moomoo Financial. If you're looking to start investing or expand your portfolio, Moomoo has an incredible offer just for you. When you open a brokerage account using the link in the description and deposit as little as $1, you'll get a chance to draw a free stock, and that stock could be worth up to $2,000. But that's just the beginning. If you make a net deposit of $100 or more, Moomoo will reward you with 5 free stocks, each potentially valued at up to $2,000. That's a huge opportunity to kickstart your investing journey with minimal effort. And if you're ready to go all in, depositing $1,000 or more unlocks an even bigger reward, 15 free stocks. That means you could be looking at a total value of up to $30,000 in free stocks just by getting started. This is one of the best deals out there for new investors, and it's a great way to explore the stock market with zero commission trading, advanced tools, and a user-friendly platform. So, don't miss out. Click the link in the description, sign up, and grab those free stocks while this offer lasts. Now, let's jump right back into the video. This isn't just a theory or hype. There's real data here, and that's what makes the next few weeks absolutely critical. With momentum building and pressure stacking up, those 62 million shorted shares could turn into a powder keg. If the setup keeps holding, it only gets riskier for short sellers and more explosive for everyone watching. Let's talk catalysts. AMC is no stranger to volatility, and any surprise earnings beat, positive news from the movie industry, or strategic pivot such as asset sales, partnerships, or unexpected cash injections could be enough to change the mood in an instant. Also, never underestimate the impact of retail investor sentiment. A coordinated buying push can send signals across the options chain, triggering gamma squeezes and adding fuel to the fire. But we also have to be real. This stock comes with risks. Negative headlines, broader market pressure, or regulatory moves can kill momentum fast. This is not a guaranteed outcome. It's a setup, and setups only matter if the trigger hits. Wall Street analysts are split. Some are dismissive, pointing to AMC's fundamentals and calling the short interest speculative noise. Others are more cautious. admitting that the short setup is heating up and warning clients to monitor it closely. But here's the thing, a short squeeze doesn't need analyst approval, it just needs pressure, time and volume. And right now, those elements are all building. AMC might not be in the exact same position it was in 2021, but it doesn't have to be. What matters now is that we're seeing the early warning signs of a move. High short interest, moderate but rising borrow rates, days to cover above 7, and a retail base that still has skin in the game. This could be the perfect storm, or it could be another head fake. Either way, the stakes are real, and the risk-reward is one of the most interesting on the market right now. Let us know in the comments. Do you think AMC is gearing up for another short squeeze, or are these just echoes of the past? And if you want more high-impact market breakdowns like this, subscribe and stay sharp.